Hey, Cal Ewing here, and I hope you're enjoying my video series that I did with Derek Long from Quest Trust Company on how to use your self-directed IRA and your retirement savings to invest in real estate. I wanted to include this video to update you on a few things that have changed in my own business since the recording of this series with Derek. But the objective is still the same, which is to earn a nice, stable, safe return backed by real estate. And I'm going to share with you two case studies of some notes that we picked up. We call them notes, but basically we bought mortgages in Texas. And I'm going to show you exactly how the numbers work and how we still work with self-directed IRA investors who want above average returns on their money. As a private lender, we actually partner up with them. We call them a funding partner, but we work with self-directed IRA investors to fund these deals, allow them to generate a really great return on their money. Again, all secured to real estate. Okay, so I'm going to go over two performing notes we recently picked up down in Laredo, Texas. Both are very similar properties because we bought them from the same note seller. And I'm going to show you the numbers and why I wanted to buy them and the benefits we are getting from this deal and our self-directed IRA private investor that helped us fund these two deals. All right. So they're not pretty. That's not the point of this. The point of this is to earn a great return and some solid, steady monthly cash flow. Okay. So this manufactured home was built in 2012. And like I said, it was just moved on to the lot. And a borrower buyer is now living in it. This is their home, and they're now making a monthly mortgage payment on this note. And me and my self-directed IRA investor, private investor, we are the bank. We're the owner of the note. And so now they pay us every month. Okay. So what did the original note look like? Well, it's a first lien mortgage or first lien deed of trust, which is what they call the mortgage in Texas. The original balance was $70,800, and they started originating this mortgage in October of 2022. Okay. We came in and purchased this mortgage in February of 2023. Okay. So there'd been 4 months, I guess, of performance, and the borrower had not missed a payment since the origination. So that was a good sign, showing that they were able to make those payments consistently. Okay. So it was a 30-year note, and the interest rate being charged to the borrower buyer is 12%. And they are paying $728 in principal and interest, okay, which they're now paying to us because, again, we're the bank. We're not the owner of the property. We're the owner of the note, okay? Sometimes a lot of people that are familiar with real estate investing, they get that confused. We're the bank, not the property owner, okay? So when we bought the note, the borrower still owed $70,718 on the mortgage, and we bought the note for $50,000, okay? So you can see right there, there's a $20,000 discount on the date of purchase that we created. So we created value from day one. We made money in the buy. And what that means is if this borrower decides that they can now qualify for a traditional mortgage and they want to pay us out, or they sell off the property to a new buyer, we're going to get paid whatever the balance is at the time, but around, if it's recent, $70,000 on a $50,000 purchase. So there's $20,000 in profit right there. Okay. But now let's talk about the cash flow, which is the most important thing. So as I mentioned, the borrower is being charged 12% interest. Okay. Now, if we would have bought this note for the full amount owing for $70,000, then we would be making 12% as well. But because we bought it at $50,000, our return on investment is actually a huge 17.5%. Because they're paying 12% of this amount, not 12% on 50. So it increases the return on investment. And I just love it when I can buy performing notes or get a non-performing note reperforming and earn these kinds of returns. All right. So the equity, now let's talk about that as well, because we did a broker price opinion on this property before we bought the note. And it was determined that the property is worth $100,000. Okay. So what that does for us as a note holder is it's equity in case something goes wrong with the borrower. All right. So if the borrower can't make their payments and we have to foreclose, we know that this property is worth $100,000. So the chances of getting our full $70,000 that's owed to us right now is pretty high, right? If we took this to the foreclosure auction, chances of someone buying it for 70,000 or higher are very good. However, even if they didn't pay the 70,000, well, we're only in it for 50, so we're in it for 50% of value. So the odds of us getting the full investment amount back are extremely high on this. I'd be very shocked if we couldn't get the full $50,000 investment back when we foreclose, okay, if we had to. All right. Now, the other thing we would do or try to do if the borrower wasn't paying is actually try and negotiate a cash for keys, or a deed in lieu, it's called, where we go to the borrower and say, look, you're going to have a foreclosure on your credit that's going to affect you for the next 7 years. We can avoid that for you. If you want to just deed us the property, we'll give you a couple $1,000s to move out, cover your moving costs. You deed us the property, and we can walk away and be done. And in that case, we now own this property as the lender, and we can sell it for the full amount. So we can go and list it and sell it for 90, 100,000, whatever we can get for it. Okay. So there's tons of options with this if the borrower were to stop performing or stop making their payments. But we're quite happy with them making their payments every month because of that 17.5% return. Okay. Now, where does a self-directed IRA investor come into play? Well, in this case, we actually worked with a private lender to fund this deal. Okay. So I worked with a fellow. He's got his own self-directed IRA that he likes to invest in real estate with as a private lender. And so he came in and provided the capital, the 50,000 to buy this note. And now we're paying him 8% per year on that $50,000 investment. And that's going in to grow his retirement savings. Okay. And he feels extremely comfortable and confident knowing, as I mentioned, that there's a lot of equity protecting his investment. And the fact that it's tied to real estate, it's not like the market's going to just completely crash like stocks and stuff like that could. So he's really happy making his secure 8% return. All of that money is going back into his retirement account. We're able to buy this note, and it's basically a 50-50 split on the returns that we're getting just based on how the numbers happen to work out in this deal. So he's getting half the cash flow. My company's getting half the cash flow. And it's a real win on all angles. And we're really happy with this deal. Okay. So I'm going to go just look at the other one. I'm not going to go through it as in depth, but here's another one very similar, as you can see. The numbers are almost identical. In this case, we paid $55,000 for it. Our investor is still making 8%. They paid a little bit more into this deal, and they're earning 8% per year again. This one came in as being valued at $90,000, so slightly less than the other one, but there's still a ton of equity there to protect us. And again, our return on investment is 17.4%. The borrower has been paying on time every month since September. And again, 12% interest. So it's almost identical deal. And we were able to pick up both of those notes. So that's these two deals. We're happy to get more people involved that have self-directed IRAs or just investment accounts that they want to earn a higher rate of return on, secured by real estate and secured more specifically to mortgage notes like this. Okay, so if this sounds like something you're interested in, I'd be happy to go through and answer any of your questions. And if you're interested in maybe getting involved in our next note deal, we're always making offers on new notes all across the US. And we're happy to bring on potential funding partners like the ones we were using on these two deals and help them grow their retirement savings. And it also helps us grow our real estate investing note business as well.